Hi there, investorholics. Welcome to the ETF Spotlight Review. Today we're taking a look at GOVT, which is the State Street Spider S&P ASX Australian Government Bond Fund. That's a bit of a mouthful. So, as always, why are we looking to invest in bonds? Well, pretty much gives us income, so it's good for retirees, or good if we're trying to build up our financial future freedom machine, so to speak. So some key features of bonds typically are low cost, the ETF's tradable, transparent, gives you, you can sort of see the performance, and obviously having some bonds in your portfolio gives you instant diversification. Okay, let's just dive right on in. Investment objective here for the S&P ASX Australian Government Bond Fund is to track the returns of the S&P ASX Government Bond Index. So that index includes securities in the government, Commonwealth bond and state government bond indices. So pretty much just federal and state government bonds. So the issuers must be either the Australian Commonwealth Government or Australian state or territory, or semi-government issuers, so sort of the next level down below those, sort of like infrastructure funds and that type of stuff. As always, we sort of need to take a look at why we bother doing these type of things. So if you're investing in this ETF, it gives you core index exposure, potential core Australian fixed income exposure for investors. That's pretty straightforward. Diversification at a low cost, so pretty much you've got quite a few bonds within this portfolio, so therefore you're quite well diversified in the bond part of it, so to speak. Access to high quality, so 60% of the fund. Actually, it's pretty good because, like I say, 60% of the holdings of the fund are AAA rated, so that means they're very stable, very reliable returns. So pretty much the higher the so if you're up in AAA, that's the highest rated bonds, so they're the safest bonds. So if you're looking for capital protection, that's 99% assured. Nothing's 100% assured in the world at large anyway. This might be one to look at because it's so highly rated. And also you're going to get your income, so potential to benefit from a regular income stream in the form of dividends or coupon payments. And we'll sort of take a look on the next slide what we're in for in that regard. Okay, so we had a net asset value at the time putting this together at $25.80. It's trading just above that at $25.81. Market cap of 28 million. So this ETF is quite small. Management fee here of 0.22%, which isn't too bad. For a bond fund, how much work really is there involved in it? But 0.22% is pretty reasonable. You get a payment every quarter, so January, April, July, October. So if you're looking for regular income, that's not a bad, not bad timing. Dividend yields about 2.7%. So bonds are typically used as a safe haven assets. in times of higher risk. So, you know, sort of gold sort of usually looked at as the same type of asset. So like I was saying before, bonds help preserve the investor's principal capital at lower risk and volatility than average in the stock. So if you're looking for capital preservation, but you still need some income, then bonds probably aren't a bad thing to have a look at. So bonds are a vital component of a well-balanced and diversified portfolio. Some people think anyway, so that's the accepted wisdom. So, you know, having a few bonds in your portfolio might not be a bad thing. If you're looking to generate income, you know, bonds probably are something to look at. Are they the best option? You know, maybe there are some other better options out there, but definitely worth using as part of your research. So as we're researching, also take a look at GOVT as another option. BOND is another option as well. There's quite a few different options for bonds, and you know, international, local, you know, Australian government bonds or corporate bonds, you know, bonds issued by companies. So, you know, as I say, have a look at GOVT and also BOND. Are they the best options? I'm not 100% sure, but it's a start for your research. I'm kind of just starting to look at this sort of part of the ETF world. I mean, I think there possibly are better ways to get your monthly income or whatever than possibly using this type of thing. But as I kind of said before, it's AAA, so it's quite highly rated. Anyway, the bonds that are held in the portfolio, you can see on your left there, the top 10 anyway. You know, total return, you're not shooting the lights out. You know, it's a bond fund. It's really designed for capital preservation. So, like sort of as I touched on before, you know, if you've got some cash, you know, pretty much you don't want to put it in the bank, then possibly a bond fund like this is worth looking at. Total return since inception has been 3.26%. You know, year to date, you're looking at minus 1.31%, so you're down a little bit. So, you know, hopefully, I mean, the markets are kind of at flux at the moment. You're seeing interest rates come up and that type of stuff, and interesting times with Russia and all the rest of it. So, you know, it's a little bit unknown as to where how the bonds are going to sort of go, but you know, sort of more of a safe haven type asset in sort of riskier times. So, you know, you might see these type of funds perform a little bit better in the shorter to mid-term, so next 6 to 12 months, that type of time scale. But definitely worth having a look at. You know, bonds in this thing are AAA rated, but you know, this is a small fund, so you know, trading in and out of this may be difficult because there's just not the volume. So that's another thing to have a look at. Just keep an eye on the volume on these small funds as well. Anyway, hopefully that was valuable or added a little bit of value, guys, and bit of food for thought. So, you know, your investment portfolio may not just be bonds, may not just be stocks. You might want to include some bonds in as well, or some other different instruments to bring in some more regular income. So then you can actually use that income to, you know, put back into your stock portfolio, investment portfolio, to help you build it up a bit quicker. Anyway, guys, hopefully that was valuable for you guys. And as always, leave a like and a thumbs up. Thanks, guys, or a comment.